Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel L. Conan, along with Brianna Valesky, and we have Tommy Lackey on the line. He's founding partner and CIO of Barber Lackey Financial Group. Tommy, how you doing? How's the markets been treating you over the last week?
I'm doing great right now. Last week, I think better than me expected. I would say before that, was a little bit cautious and have been for a few weeks, but I will not be one to stand up here and say I expected all of that. So just had to deal with what came, and you just do your best to maneuver. Seemed like last Monday, if you could get bids in, was a great time to sell a little premium. Seemed to work out well, even though it was very scary. But outside of that, the problem was actually getting much of that stuff in, I think.
Okay. All right. Well, let's go. Let's go here right to your scans here and what you're looking at and your scans. Give you your trades. Could you just tell us a little bit about your scans, how you came about them, and some of the components of them?
Sure. I have two major scans I use. One is the nitrous scan, which is more of an acceleration scan, and it's an upside scan. So in this market, it seems to be pretty barren. And it's also can be a tell on the markets when you only have a few names on that list. It means that things just really aren't working that well. And then the RS movers, which might be more important at a time like this, is a internal relative strength based on the universe I use of 500 stocks. In 29 different subsectors, and basically it breaks them down that way, runs and sees which are moving basically differently than others. You call relative strength what's the strongest and what's the weakest, but the way I use this scan, it's what's moving, what's changing its character the fastest, and then I look there for what the setup might be.
All right, so let's go to a few of the stocks in your nitrous scan and take a look at them. And where would you like to start here with issues in the nitrous scan?
I think the one that caught my eye the quickest last night was Gold, Brass, and Copper Holdings. It's metal fabrication, BRSS, small $420 million company. But if you look at that chart right there, it had a nice breakout yesterday, even with other metal issues around, even though industrial metals are perking up a little bit. But this one really seems to be standing out, and it has a pretty solid fundamental sheet as well. And then you look down there at the bottom, and that daily volume print has been wonderful for about 3 or 4 weeks since it gapped up.
So you have
so that's a great looking one.
Yeah, so you're going with the momentum in this one here. Are you waiting for a breakout of the previous day's high? Or does the overall, the SPOO's traded down 53? Does that put a little pit in your stomach from playing it from the long side?
Yeah, it absolutely.
How do you factor that in?
I mean, you've got to be careful here. Well, you got to be careful on this and that breakout, and you got to watch for a little while and see how it holds. I mean, I think anything you do today, you need to be real careful about where you are on either side, because it is, us being down 50 points is a tough spot. I just posted a chart a minute ago, though, of the ES showing that 1912 is a pretty important level, 50% retracement in the lower Bollinger Band right now on a 5-hour chart. What I like to watch with these types of in futures and these types of moves. So yeah, you've got to watch and see, and you've also got the all-time highs up in the 20 to 22 range, 20 to 21 range above as well. So the breakout's a solid thing to draw your attention, but you do have to be careful. You look here at the 19 level and see if it back tested at all today. And then if it keeps moving, you just got to see what type of trader you are. If you're a longer term trader, you got to wait till it closes over that previous close over 20. If you are short term, then you kind of pick your, day trader. You might be able to make a few percent off of it, but I wouldn't stay long if these markets don't perk up. But strength in a market like in this, in a weak market like this, where it never really gave much back in the last couple of weeks, is an important tell, in my opinion.
Tommy, you're a fan of mine if you like the 50% retracement, because that comes in right there. I just did the math, 1911.875. Let's call that 1912. I mean, talk about how you use that. I mean, that's a soft number. I mean, it might chop through it by quite a bit here. So it's just not something more of a reference point than just an exact number to trade off. Wouldn't you say that?
Sure. I mean, I think that's what everything is. I mean, it's hard a lot of times to trade off a specific number other than to just get your risk levels. I mean, that's really what the numbers are for, is if I trade off at this level, how far down before I have another area that might help and how much risk do I have to take? I mean, but the reality is with any of these, especially the retracements, is that, the 61.8 is right past it. So let's
Yeah,
just
right. Keep an eye
wait
on
and see
that.
how it acts. And also give it a little time, because I think more times than not, it pierces it before it makes a final a stand where one of those is.
What else is on the nitrous scan?
Another one that BTU's on there, but I'm just not sure I feel like chasing that one here right now. But also another one I liked on there was AIT, and was talking with a friend of mine about it last night. Looks like it's got a nice move. Again, during all of this, it hasn't really seen a lot of problems. It's got a very nice volume print down there to where pullbacks were bought pretty quickly, and it looks like it's coming off some off of potential lows. So you play again depending on your time frame. You can play that trend line breakout that started back in late 2014 and just coming kind of slightly across. It's kind of a falling wedge type scenario. Or if you are again, depending on how today acts and things like that, the pullback down to around 141 and change from that level as well is not a bad place to be looking if it holds. That would be holding that trend line breakout.
Right,
But the weekly looks like it's trying to turn.
All right, so you got the nitrous scan, you got the movers on the upside here. What do you got in your relative strength scan today?
Well, when you flip over the relative strength scan, again, you're looking at two different levels. You have the RS gainers and the RS losers. But one thing I would caution people of is don't say just because it's on the gainers list, it's a winner. It's on the losers list, it's the losers. Because if it came off very low levels, it could be a good short. So it's something you still have to look at. But let's look at a couple that I think, if these markets cooperate, can still perform. I think the oil names are starting to strengthen, but it's still very early and it's going to be very choppy. One of the names that I liked on there on that level was Oxy.
Okay.
If it can get over 74, it could very quickly close that gap. And then Oxy's one of those names is when it likes to move, sometimes it can move fast, so it could go up to close to 80 if it can get through there. Disney is one that I think is on a kind of a look both ways type scenario, or it was last night, but this morning's gap down puts it right down to back in that 99 level, so I would be a little more careful with it. I was interesting to see Mattel after a false breakdown last week. During all this mess, it's now breaking above a recent consolidation. That's more on an upside. Now, on a downside, off that same gainer scan that I might look on the same level. Like I said, Disney could be both ways. I think for a little while, ExxonMobil, now that it's up here in the 75, 76 range, it could retrace some of it. But as I said in the email I sent to y'all, is that almost anything, the way we retraced up here, you could pick a level and say, okay, from here it can retrace a certain amount. The problem we run into now is coming in this morning with the big gap down. Can you get a good enough entry to make the risk reward worthwhile?
Right.
If you're just looking for a retracement.
Right, and also you had EQT on there.
That's been our names. It's holding up pretty nicely. And again, it's the same on that energy side as it's down towards the lows. But yet on the other side of things, it has really started to perk up, hit with early. It's at a balance right now. I think you get over that 79.80 level, and you could get some movement up to the next level, 82.50, and then ultimately, depends on how far we retrace that movement. And again, we look at retracements, like you said, as just a guide, because if it do those retracements, it can keep going. There's nothing says it has to stop there. It's just those are the levels you want to watch and see how people act.
Okay, let's just move on here to Apple Computer. Boy, let us out of the abyss last Monday. Showed excellent relative strength. Actually got over the highs from before this whole thing started a week ago Friday. Pulling back now. Where's Apple on your radar?
Well, I think it's the same thing. One thing I mentioned this weekend in my strength and numbers report is that I think we might ought to look for, even though a lot of people are expecting for retracement, I said for people to also look for those 3 and 4 day high and tight flags. They don't have to be too long. They don't have to be, well, today it's a little bit of kink in that, but it doesn't necessarily end that idea that if we gap down here and this market does get bought this morning, I think what Dennis said was exactly right. You watch that first few minutes, even though you might not want to be participating in it as much, you watch it and how the buyers come in and see what kind of happens. And then I think up till about 10:15, you really kind of watch close and you see kind of what happens. And then there you start looking at, okay, how is this going to react? I think we could be back up in those, but it's just as easy here that we're kind of stuck in the middle, that if this thing fails, as we've seen a few times in the last month, it could fail hard. So you have to be prepared.
Okay.
It's a tough market if you're not willing to move fairly fast if you have to.
Right, right. Being nimble is always a key here. Just taking a look here, some of the other issues here, the financials. I mean, you have a Goldman Sachs here traded down 530. Any thoughts on Goldman Sachs?
Well, I'm kind of one of those positions where I'm a little more concerned about financials than some of the other areas, and I have been for the last week or so. While all this happened, now they bounced actually a little harder than I expected them to, but I'm not in the raising rate camp at this point. And I think there was a lot of people looking forward to that for financials. And so you put that with this other kind of turmoil there, and I'm just not sure where their catalyst comes from. So, you always want them to be performing well because they're such a big part of the index. But the reality is that I don't think they're the best looking opportunity here on technical or, the little bit I deal with fundamentals.
All right, we've been on the line with Tommy Lackey Jr. He's founding partner and CIO of the Barber Lackey Group. Thanks a lot for sharing those information on your scans, and we'll keep an eye on them in today's session. Thanks, Tommy.
Thanks, guys. I appreciate it. Fun as always. You guys have a great day. Good luck out there.